Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 8th of November, and today we have back on the show James Whelan, Managing Director at Barclay's Pearce Capital. James, as always, great to have you back on the show.
Brian, great to be here. How are you now?
Good, thanks, James. Now, before we get your insights, let's take a look and see how markets across the region have performed. We're going to start with Singapore. The Straits Times Index is down 1.41%. Looking across to other regional markets, we've got the KLCI, which is down 0.3%. Shanghai is unchanged. The ASX All Ordinaries is up 0.23%. The Nikkei is down 0.1%. The Hang Seng is up 0.19%. And rounding up the numbers, we've got the Kospi, which is down 0.24%. So very mixed markets across the region. Tell us why.
Well, gee, if I knew why, Brian, generally speaking, though, markets are being seen as being a little bit muted, I think is the word, in the lead up before the FOMC meeting. No, actually, it wasn't. It was a press conference that was coming up. Sorry, I actually had a different note here. I'm completely reading something completely different here. Jerome Powell is actually set to be speaking, so that was the idea with things being a bit muted on that one. Off the back of the 8th straight gain for the US market, and I potentially just sort of ran out a little bit of gas waiting for the next thing that's going to cause the US market to rally. It seems like the markets at the moment, Brian, are just sort of taking it easy, and then something happens in the US, they end up, and then European and Asian markets just sort of teeter on by and then go. Locally, we've had our own news, which has caused our own little bit of anxiety that we've got here in the market.
Well, locally, then you've got a couple of things that happened. One was the RBA rate rise yesterday. That's going to cause a lot of hurt among home buyers across Australia.
That's right, Brian. The RBA put rates up by another 25 basis points yesterday. Generally and widely predicted by economists, I think 23 out of the 24 economists surveyed did say that there was going to be a hike. I think the bond market was only pricing in about 80% for it. I was very much in the yes, I thought they were going to hike area. New governor locally, for anyone just sort of tracking, getting a finger on the pulse of what's going on over here. A new governor, and this was the new governor's first chance to make a statement and say, yes, the data is hotter than she would like it to be. Here, we're not going to muck around. We are actually going to get in the way of it. And then from there to say, potentially, we're going to be monitoring the data. This is the thing. If they were serious about the hike, if they were serious about locking down inflation, which is all they're trying to do, maybe don't say we're going to look at the daughter and going between this hike, pause potentially. I know what your next question is going to be there, Brian.
And absolutely.
Are they done?
Is there an expectation of another rate hike, or are we done with that one and done?
I'm happy to say that that's going to be it for them. I mean, obviously, you don't know what happens in the future, but just the way that markets are predicting, the way that things are looking right now, that's it. That's the top as it's going to go. The consumer, the mortgagee, absolutely cannot afford another one. I think that's the idea too. But however, if the data continues to be sticky and if inflation does continue to be sticky, it's going to be a very interesting conversation for the RBA to be having earlier on in the next year. But I think that the next move that's been priced by markets is down.
James, but one of the key challenges around Australia is the fact that the labour market is white hot. You also have a rental market, which is white hot. All of these are fueling inflationary pressures within Australia. There was an article there was a LinkedIn post, in fact, by Jessica, who from Mumu, who basically also talked about how even the basics like coffee prices have gone up so much over the last few months. Yeah. How is that going to? All of these factors, then, isn't that telling us that the inflation bear has still a lot more to run?
If you put the most basic theory together, then you are absolutely right, Brian. Now, this is if we want to have an economics debate on this show, then let's go nuts, mate. Because you know what, it's the day after Melbourne Cup, and I'm ready to roll. But the general theory behind the idea that the RBA cannot stop inflation is that if you raise the interest rate for someone who has properties, then they're going to be able to pay for that higher rate, the higher interest payment. They need to actually pass that down to their tenants. Those tenants then, in any way that they can, commercial or property, then have to pass those costs on as well. So the actual basic theory, and this is an economics theory, that the actual raising of an interest rate is in fact counterintuitive in that it raises inflation. Yeah, I hate to tell you, Brian, but that economic theory appears to be correct. Generally speaking, it's just not going to it's not going to help anymore.
Now, on a different note, then we've got oil prices which have dipped to a 3-month low, especially around weak Chinese export data that's just come out, and obviously that's fueling concerns around the slowing down of the Chinese economy. What's your take on this?
I think that China is moving into a very interesting cycle of, in fact, deflation is the word that's coming out now. Pork prices dragging. I mean, China being the biggest pork producer and consumer looks to be taking that country into deflation. Very interesting change, and it's funny sort of the switch between the two areas here, where you've got inflation as being, we can't fight it to the upside. China actually sort of wants to get this turning around, a little bit like how we were before COVID. But yeah, so it looks like deflationary pressures in China. I'm not sure how many things they need to be able to throw at it, but China always, we've had this conversation before, Brian, they can engineer what they need to engineer so that they can change those numbers to be around. Now, if they need to, then they will. Everyone's just waiting for that to happen. I think that China is one of those wait and see sort of situations. It's going to continue as is.
Well, on that note, China is a wait and see, and will continue as it is. Thank you very much for your insights, James, and thanks for coming on the show.
No problem, Brian. Good on you, mate.
Now, we've been speaking to James Whelan, Managing Director at Barclay Pearce Capital. This is BizTech's Asian Midday Market Watch, and I'm Brian Fernandez. Check out this conversation on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.